On today's episode, we are going to take a look at FSLY. This stock dropped 30% today. That means in one day, it lost almost 1/3 of its value. So today's episode is going to be broken down into the following. First, let's take a look at what happened, and is it giving us a buying opportunity as long-term investors right now? Not only are we going to take a look at the news, but we're also going to take a look at it in depth to see what this means with the overall business for FSLY. Next, I want to take a look at what I like about the company, what I don't like about the company, and just give my overall thoughts. Like always, if you're new to my channel, if you're a long-term investor, if you like to learn about growth stocks, make sure to hit that subscribe button. To all my returning viewers, thank you so much for the support. It truly means a lot. Like always, if you ever want to get in contact with me, YouTube comments, Twitter, Twitch live streaming, josenaharo.com, or you can find me on my Discord channel, which is free to anybody that wants to join. But remember, everything I say here is just my opinions. I am by no means a professional, so none of this should be taken as advice. So now that we got that out the way, let's get started. Alright, so like I mentioned, today we are going to take a look at FSLY. This is ticker FSLY to all my podcast listeners. Right now it's down 30%. And before we go any further, don't forget to subscribe and hit the thumbs up. It helps the small channel out so much. It truly means a lot. Also, let me know, are you a FSLY long-term holder right now? What are your thoughts on FSLY? Are you buying? Are you selling? So it's definitely good to share with the community, and I want to know what you guys are doing. Finally, if you want to get a free stock, there is a link below for Webull, and if you sign up and follow the instructions, we both could get a free stock, which is great. What's better than a free stock? It's pretty much free money. All right, so FSLY right now is sitting at $91. It's down almost $32 after hours. And for the day, it was also down about $6. So this is insane. Like I mentioned, in just a matter of a day, this company lost 30% of its current valuation. Market cap right now, this market cap on google.com is not updated. Its current market cap is about $9.5 billion. So this is a sub $10 billion company. We can see though, FSLY is very volatile. In the past, I think right now we're at levels last seen in late September, so it's not like we're pretty far off. FSLY is a very volatile company, as we've seen, and I've done a video on FSLY many of times, and that's what one of my biggest risks is, and that I mention in every single video, is just the volatility this company brings. All right, we can see in the past 6 months it has had since in August, in those last earnings, it saw another 34% decrease day as well, and then in just this recent October, in just a few days, it went up 34%. So volatility works both ways, right? You can see those crazy up days, but you can also see crazy down days like today. All right, so now let's take a look at what happened so we can understand why this company is down. So today, October 14th, FSLY provided preliminary third quarter revenue results. They have earnings right now on the 28th of October, so about 2 weeks from now, but they gave us some earnings results ahead of time of what they might expect. They haven't given us the full report, right? They just give us some form of guidance, and usually that guidance, since now this quarter ended September 30th of 2020, so about 2 weeks ago, they can give you a guidance that's very in line. So originally, the previous guidance for this company was $73.5 million to $75.5 million for quarter 3. Right now, they expect $70 million to $71 million. So it's not a big it's not a big decrease, right? It's definitely not a big decrease. But why did the stock price drop dramatically because of that? There's multiple reasons. The first reason I want to talk about is just the overall hype of a company. Usually when a company is overhyped, they're priced to perfection. What does priced to perfection means? Priced to perfection is they were expecting earnings to be a lot better than what the guidance was expected to be. So not only did the guidance not meet expectation, now it's even lower than what was expected. So this drives that hype completely down. What's the second thing? And the second thing is one that I don't think many people are looking at. Right here, I'm taking a look at the quarterly revenue for FSLY in the past since 2018. And we can see quarterly revenue on average is always higher than the quarter before. I don't think there's actually a quarter where FSLY has done less. Yet there's since 2018, FSLY has not had a quarter where the most recent earnings were lower than the previous earnings. But look at this. The earnings that they did on July 30th, they had revenue of $74 million. So now they're expected about $71 million. So this is going to be the first quarter that revenue is lower than the previous quarter. That to me is not anything bad, right? I don't expect, you shouldn't always expect companies to grow every single revenue, right? It is great to see that, but that should not be expected because unfortunately there's so many things that could happen within the business world, within macroeconomics that does not allow it. So volatility is also seen within revenue segments, but I do believe that is also adding a little pressure to the sell price. But now let's take a look at some other stuff that they mentioned here. They mentioned that recently in October 1st, they did an acquisition successfully for Signal Science. Signal Sciences, and it's something I talked about. I'm gonna post a video. You should see it in my thumbnail, and not in my thumbnails, in my whatever these ribbons are up here. You can see and click it, where I talked about Signal Science and this acquisition. This acquisition was completed on October 1st. So even though this acquisition has been talked about in the past, it's not gonna affect the company's earnings report for this quarter 3 because the quarter 3 ended September 30th, acquisition ended October 1st. So a lot of people might be, again, maybe people that don't know the subject might have expected the revenue to increase dramatically because of that acquisition, but because that acquisition took place after the quarter ended, it's not really affecting it at all. Now, let me talk a little bit about this acquisition and how it's doing. So Signal Science was bought off by FSLY for about $775 million. $200 million were paid in cash. The other $575 million were paid in stock. This means that FSLY paid about a 19x revenue for this company. Given this a 19x revenue, that means that you would do the 775 divided by 19, and we can see what the annual revenue for this company would be. And I think I did the math somewhere here. That would give this a revenue of about $40 million. So $40 million a year on average is adding the revenue to FSLY about $10 million extra each quarter. So again, this alone is going to help revenue guidance improve for the upcoming quarters for FSLY. And I think that's something a lot of people might be overlooking. All right, so next what I want to do is they also mention why they are dropping this, the guidance, right? Why is the revenue lower than expected? The first reason is due to the impact of uncertain geopolitical environment, usage of FSLY's platform by its previously disclosed largest customers did not meet expectations. So previously last quarter, FSLY mentioned that TikTok was their biggest customer, giving roughly about 12% of revenue for the first half of quarter of 2020. So now they're saying that, hey, due to geopolitical events, TikTok did not use our platform as much as we intended them to use it, so that revenue dropped down. The reason, right, revenue for FSLY is more on a usage basis. So it's how much a customer uses. So if less people are using TikTok, that means that TikTok is paying less to FSLY for that platform. A lot of people are saying that this is thanks to the United States tension, but I also wanted to dig a little deeper and see who was the biggest downloader for TikTok by country. So in 2019, at the end of 2019, the biggest downloader of the app TikTok was in India. They made up a huge portion of this company's downloaded apps. And earlier in quarter three in here we can see in June 29th, India suddenly banned TikTok. So that eliminated a lot of people. So even though, right, there is the United States tension between TikTok, between China and kind of having that ban of TikTok, I personally believe this India ban, I think this was the biggest impact that led to TikTok's decrease in revenue. They also mentioned that during the later part of the third quarter, a fewer customers had lower usage than FSLY had estimated. And this one, I think, is the one that's a little bit scary. And I think it's the reason we're having a lot of other stocks follow through with some negative comeback. I think like Net, which is Cloudflare, I think is down about 5-6% for the after hours after FSLY reported this. So a lot of companies that are near Fastly or are in somewhat this working from home space where we're doing really well because of people staying home, people working from home, all those other companies are like, hey, what's happening here? Fastly saying that there has been a decrease here. Maybe our earnings are not going to be as strong as expected. And this is a little bit weird, right? Because we've seen a few companies earlier this week or last week, like Twilio, and I forget what was another company that reported that their earnings are actually a lot better than they expected. So right now the market's like, wait, who's right and who's wrong? Are we actually, is this cloudy market that was doing so amazing during COVID-19, is it really slowing down right now? Or are the other companies that are saying that their earnings are better, is it actually improving? So the market doesn't know which way to go right now because of this statement. And I do believe this is going to add a lot of volatility to the rest of the cloudy market. And now also let's take a look at that $70 to $71 million of revenue that is expected to be this year, this quarter. With that, that's still over, there's a calculator, that's still over 51% growth compared to the same time last year. So now let me talk about some of the things I like about Fastly. First, Fastly, the overall market that they're in, I believe is one that's going to continue to grow. First and next, the acquisitions and the partnerships that they're meeting. In the last episode, I talked about partnerships with Google Cloud and their acquisition. This is showing that Fastly knows where they're focused on, and they're trying to improve their overall presence in that market. Next, even with this downsize in revenue, their revenue growth year to year is still in the high 50s. And in the past quarters, last quarter was 61% growth. The quarter before that was 38%. And the quarter before that was 44%. So we can see Fastly is still a fast growing company. No pun intended there. Some other things I like about Fastly is it definitely has a very, very strong balance sheet. It has plenty of cash and cash equivalents and current investments compared to debt. This company pretty much has no debt. But thanks to this acquisition, unfortunately, we are going to have to wait till this most recent earnings to see how that balance sheet has shifted. Again, they used about $200 million in cash to buy off this company. So again, it's in my mind, even with that $200 million of cash, they still have plenty of cash compared to debt. There are a few things I don't like about Fastly. The first thing is it doesn't have positive cash flow when we take a look at GAAP operating cash flow margins or free cash flow margins. Right now we can see they are on the negative when we take a look at trailing 12 months. So this company is burning a bit of cash right now. Other things I don't like is it's not profitable, and we can see that just because a company doesn't have and let me say this, a company can be profitable and still have negative cash flow. So they don't really correlate with each other. Netflix is a perfect example. Netflix is profitable in form of GAAP profit margins, but it is burning cash when we take a look at their free cash flow. So right now, Fastly is definitely not profitable. And if we take a look at trailing 12 months, it doesn't look like it's expected to be GAAP profitable anytime soon, but it definitely has some strong gross margins. The final thing about Fastly is right now, with the current price and forward price to sales ratio with revenue about $400 million by December 2021, and I think those are pretty conservative numbers. It actually gives this company a forward price to sales ratio with the current market cap of closer to between 23 and 24. This, again, is still a bit expensive, but it's at least giving us valuations right back then, as of before this drop, valuations of 32.84 price to sales ratio. That to me was a bit expensive. Now we're getting into the low 20s. That is pretty nice. Obviously, I think even lower would be more amazing, but I do believe right now with that valuation, it's cheaper than it has normally been. So for me, I wouldn't mind buying in slowly and just dollar cost averaging. But like always, this, even with a forward price to sales ratio of about 24, I still believe it's a pretty bit high. So I still, one of the biggest things for Fastly is I do believe it will still continue to be volatile. So if you don't have the stomach for the volatility, this is definitely not a stock to look at. If this stock ever drops down, what to me would be an amazing buying point? To me, an amazing buying point would be anywhere between 75 to 80. That's where I would really be super happy buying the stock. 91, I would say I'm somewhat happy, but obviously 80 within the 80s and mid 75s would probably be some of my favorite points to add in for this company, especially thanks to that Google partnership with Google Cloud, the new acquisition, and just the overall way this company is headed. So that's it for today's episode. I hope you guys like the information that I provided here. I obviously didn't just want to talk about the news. I wanted to look behind the news and see how it really affected the company. So like always, if you like it, make sure to hit the thumbs up, make sure to leave a comment and subscribe. It helps the channel out so much and I truly, truly appreciate it. Take care guys, have a good night and see you next time.